What's up, everyone? One sec. There we go. All right. Let's see. One second, guys. Need to start the X. I don't know why it's not starting. Come on. Oh, God. Sorry. 1 second, guys. We have need to. Not sure why it's not starting. Let's see. There we go. All right. And we're live. ¿Cómo estás, mi amigos? All right. So let's take a look-see. Thank you all for joining. Let's give it a couple of minutes for everybody to get their tuchus here. I think this is the link. There we go. All right. All right, ladies and gentlemen. All right, welcome. This is the last slow week of August, like I've been explaining. This is not the week to go balls to the wall deep with position sizing. This is a week where everybody fucks off to Hamptons from Manhattan. Well, they've been there. That's where people, mostly summer, who live in New York City, the traders, Wall Street guys, and this is not going to be. Usually, this is not a volatile week, right? So first of all, how do we determine what's volatile week, what's not a volatile week? We look at the calendar, and we can see that Wednesday there's just nothing going on Wednesday, right? So given that there's no catalyst for anything to happen, I think we're gonna basically, a body in motion should stay in motion, but in a very slow manner. So I left an order overnight for long gold. This was yesterday at noon. Basically, I saw the prices running. I figured we're gonna retest this zone here. And that's why I left in my order, this order block right here, right? So we dipped a little lower, but it's trying, at least attempting to go up now. Okay, it's not too late to join the party either. Again, you have to. This is a slow week. When it's slow, it gets a little tricky. So these are not high probability times where you should be putting a lot of capital behind. Okay, so lower trade size. If it works out, it works out. If it doesn't work out, it doesn't work out, because it can get very choppy, and you need to give it a little wiggle room as well. So let's take a look at our targets. Is there more space for the upside? All right, so we're essentially, gold is in this contraction since April. This is a contracting volume. All right, I've been explaining to you a concept of a spring and a pent-up energy, right? Potential energy all stored, and then you release the spring and you get that kinetic energy, explosive moves. I think my physics is still right. You know, it's been a while. All right, high school physics, baby. All right. So at this point, I think we are in this contracting volume scenario. I don't know why this is so fucked up, but there we go. So there's definitely room to go, and I think, as I've been alluding to in the previous few days, especially on Friday, before Friday explosive move up, this move, I was explaining to you that the explosive moves will be coming, and they will be coming very simply because now all the traders will be next Monday is the day off. It's Labor Day, weekend, long weekend. This is when the last hurrah, last parties of the summer happen in East Coast. Let's say United States. And after that, all the traders return back to the offices and trading desks, and so the volume will start picking up. Once the volume picks up, the volatility will pick up, and your job as a trader is to capture that volatility. Okay, so you need to understand when to trade, when not to trade, and everything in between. So again, Monday was a very nonchalant day, right? So we pumped. This basically was the U.S. session, and then we both pump. This pump happened at Monday night already at Asian session open at 8 p.m. my time, which was 7 a.m. Whatever, 8 a.m. Japan time, whatever the fuck, right? Tokyo time. And then we didn't do much. Then a little anemic rise finally yesterday. And then again, now profit taking, and we're now again being anemic. So the moves are very slow. So don't bet your house on it. Obviously the trend is still anemically to the top side. So we're trading it to the top side, right? That's all it is. And hopefully, like I said, we're in a small profit. But I'm targeting these highs approximately for at least first half off. Maybe I'll hold it till then, but unlikely. I'll just close it. So we have to wait for the stock market to open in 23 minutes, cash market open, and go from there. Also watching silver. Silver is not doing so hot, but it's funny how it closed its inefficiency, right? So we had a pump, Friday pump, and then nothing ever since, which is, it's approaching a territory where it might be interesting to buy. Let's see. Oh, look at that. A perfect jump from 702. Well, again, this is why, and how do you know if the fibs are working? How do you, that was not, there we go. How do you know if the fibs are working? Well, are they being respected, right? You have a jump at 50. We didn't close. We closed around 618, and we tapped the 702, right? So definitely the algos are watching this. So, but I don't think this move is still over, because we basically retested the breakdown point. We have a breakdown, and we still might go a little lower. In silver. So I wouldn't be buying silver, to be quite honest, and that's telling me that maybe I should just take my small profit in gold and fuck off as well, because you want to watch. I watch, obviously you have to watch everything, but if you're trading gold, you want to watch silver, because you want everything moving in one direction, right? So let's say today's stock market, everything is moving slightly to the downside. That's a good indication that everything is running in congruence, right? 1 second, let me just, yeah. So I would want to see, before I start hopping on silver, let it start making higher highs and higher lows, right? So at least one high. So let's say this is a low. Let it put in a lower high, a higher low, and this is the high, and then it makes another higher high. So once we have a shift in trend, because right now what do we have? What is this? How do you call this? This is lower lows, lower highs, correct? So we need a shift in market structure. Market structure is short-term negative, bearish, right? And if I want to buy confirmation, because again, these are slow markets, so you want to trade with extra confirmation, knowing in what on the timeline where you are, right? Last week of August, we have 3 more trading days until the long weekend. Nobody's going to be trading Friday, so we basically have 2 more days left, today and tomorrow. What do we have on news? Actually, Friday we do have. This. This is going to be important. So maybe half a day Friday. producers price index. It's yeah, it's going to be very. The Fed watches this, so if the inflation again is going to be lower, that gives more indication that the Federal Reserve will be cutting interest rates. And I've been talking about it ad nauseum why we were buying gold last week and positioned long in gold. Fundamentally, same thing with stocks. This is why you got that pump on last Friday, right? Because Powell finally threw in a towel and said, okay, fine, we'll be lowering interest rates. So if the data, well, 1 sec, forgot to switch. Yeah, so this is the pump in the indices in NASDAQ. Last Friday, Powell finally said, okay, to hell with you people, we will be lowering, we're open to lowering interest rates. And if this data comes in also below these numbers, meaning that inflation is subsiding, boy oh boy, markets will fucking fly. Okay, so they will fly for two reasons, because there's even yet another confirmation that the inflation is slowing down, at least according to these bullshit statistics, which are bullshit. And after that, and the second reason it will fly a lot if that number comes in under expectation, is because you essentially have a very thin liquidity. And like I said, everybody already fucked off to have rosé and sit by the beaches, chill in the beach clubs and sit by the pools, shipping champagne and rosé, and not be at the trading desks, right? So that's the last hurrah party. This is where all the celebrities in the United States throw all these mega mention parties, this, that, blah, blah, blah. So, like I said, that means nobody's left to trade except skeleton crews, right? So, and because the skeleton crews will have to react and algos will have to react due to thin liquidity, you might have very, very, very explosive moves coming in this Friday. Again, if everything comes together in the form of the PC core PC number price index coming in lower than expected. If it comes in hotter than expected, then it's going to be more chop fest to the downside. Okay, so again, it's very important to know where you are on the map. 1 sec. I don't know why the chat is not working on X. I might be. Need to reconfigure it. Oh shit. 1 sec. All right. So this is again. It is important to understand. You're building out these scenarios ahead of time, so when that shit happens, you know what the fuck to do. Understand? And not just come in and like, you have fucking no clue what the hell is going on and what to react, right? You don't want to be just like a bouncing ball in a stream, bouncing from rock to rock by the flows. You want to have your own. You need to have set up a plan. You need to see which scenarios are likely, and then see if markets confirms one of your scenarios. The scenario it confirms, you trade. If it doesn't confirm any of your scenarios, then you don't trade, and that's it. That's all of trading. There's no magical fucking anything. There's no, I mean, some people do voodoo on the full moon, dancing on the beach, listening to ICT. I don't give a shit. On shrooms, fine. That if that works for you, it works for you. But you don't need to keep it complicated. And the good old KISS principle, keep it simple, stupid, right? Is a winning formula for ages. All right. So no need to have super complex bullshit, or super complex bullshit means it's bullshit most of the time. Okay. Or you have to be incredibly intelligent and be very, very on point to monitor it, okay? Which costs This is why banks hire PhD, rocket scientists, physicians, mathematicians, etc., 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 right, and pay them a fuckload of money to do all that, because they can sit and nerd out for these super complex mathematical formulas to whatever for the algos, and they constantly need adjustment and blah 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 blah. Okay. So, but you don't need all that to make money and make a living from trading. That's the beautiful part about it. You just have to be right. You have to be not right all the time. You have to be right in majority, at least. Even 50, you can be right 30% of the time if your risk management is on point. But you just, if you make money, you make money, right? And that's the golden rule of trading. Warren, like I said, Warren Buffett's two rules of trading. Rule number 1, never lose money. Rule number 2, see rule number 1. That's it. It's a cheeky, little thing, but it's true. You don't have to be a genius in this. In fact, back in the 80s, and believe it or not, Wall Street was not popular during 60s and 70s. And the fame, Wall Street kind of got its bearings together back in the 80s under Reagan. And that's when all the heydays, this is when you had the original Wall Street movie come out, The Greed is Good and all that stuff, right? But the beautiful part about it back then is you didn't need a Harvard MBA to get a job on Wall Street as a trader back then, okay? They actually hired kids off the street who were street smart and hungry, who the alpha dominating personalities and all that stuff, okay? Because it's a tough business, you need to be tough, and being a pencil pusher is not exactly, memorizing some garbage that they teach you in school is not going to make you a great trader at all. In fact, to this day, most Wall Street traders, unless you're a mathematics geek, that you're just a quant guy with a little bit of an autism, or in fact, lots of autism, right? Most of the normal people that get hired on Wall Street, they have to have sports background. So they had to play some kind of college sports. I played tennis, for example. And the reason for that is because you need to understand what competition feels like. You need to understand how fucking losing feels like, and how not to be a goddamn loser. And sports teaches you that. Not in today's society where everybody gets a little trophy. Oh, you were special, little Jonathan. You finished last. No, little Jonathan, you give him a fucking smackdown. Try again. Try harder. Like they did back in the day. And that's how you don't grow pussies. Because society today is definitely emasculated to the point it's, vomit-inducing. But to me, it's great because I have zero competition because everybody below my age are fucking retarded. So, most. Some are, some of you woke up. That's why you're here. You're listening. You're trying to find your independence from the system, and be self-sufficient. Okay, so I respect that. But as a general rule, softer society for sure, right? So anyway, all the beasts are coming back next week. This is going to be when all the shit is going to start popping off. Right now, gold is doing fuck all. I'm in profit. I might just take half off. If we start approaching these highs, I'll take half off, put it at break even, and just walk away for the day. I don't want to babysit this, because this might just chop around. Might as well just take some off the table, leave it at, if it runs, it runs. It's like that Rocky movie, right? If he dies, he dies, right? So the same principle. I just, why sit through agony and this volatility, not lack of volatility, and just chop fast when you can just have zero agony. All right. Well, so silver is bouncing from 618 whatever. Well, I've been talking about this golden fib zone for fucking ages. You don't know if it's going to be 618, 702 over that, but the general area with the reversal sign, right? So this is not a good candle, honestly, not instilling a lot of, that means the sellers are still trying to pop it further down. Why? Well, this is a retest, and you have this sellers attempting to, break down, retest, continuation. They're attempting this, but it's not. How do you know that you shouldn't be selling this? Well, you should be not selling this because we haven't taken out the candle's low. This is a signal candle, but the signal comes when you take out the candle's low, which we haven't taken out. Plus, again, you're watching gold. If gold is going up and silver is going down, one of them is a liar. So again, the probability of your trade working out is now going down drastically. And so I wouldn't be selling, if gold is going up, I wouldn't be a seller in silver, okay? I would think that silver will start catching up a little bit, or at least be pulled back up. So that's that. We have 9 minutes till the open. Again, since last Friday, we had the pump in NASDAQ, and essentially now, all of this week, we've done nothing. Up, down, right? Up, down. Down we go. If I see a candle like this at the bottom of the range, boom, boom, target the high. That's it. That's basically, again, all these. A lot of people are trying to. One second. Let me see if I can enable chat on X. I don't know why it's not working, but. All right, we'll figure it out later. We'll figure out the x.com feed chat not working by tomorrow. Okay. All right. Let's see, guys. If you have any questions, ask. If you want to take a look at something specific, let's take a look at currencies. I haven't taken a look at currencies in a while. Okay. All right. Interesting. Okay. So. Again, inverted head and shoulders, still printing, but no signal. This was a breakout, but see how I always wait for confirmation? This is a perfect example. This is a daily chart. The high wasn't taken out. That's why if the people who don't wait for confirmation, they're like, okay, it closed above, it means we rock and roll. And now, and the stop loss was here. Now they got stopped out. So this is why I always wait for the confirmation. That means the amount of trades I will be taking is drastically decreases, which is fine because I don't want to overtrade. I want to take those right trades. That's my job as a trader for the last 20 years, is to sit on my ass and wait for perfect opportunities when the fruit is ripe. It's ripe, you come up to the tree. For those who, I'm sure a lot of, you have never done it, but when you pick the fruit off the tree, you eat it, and it's perfect because it's ripe. Not the shit we buy in stores nowadays, unfortunately, which is, plucked when it's green and it tastes like shit, tasteless, honestly, in the United States at least, right? Unfortunately. But your job is to pluck the fruit when it's ripe and not sooner. You don't want to be, obviously, you don't want to be early because you're gonna sit on the heat. You don't want to FOMO in and when it's rotten, right? Because it's gonna go, chase the price when it's already the train has left the station. So the timing has to be correct, right? So one of the reasons why I wait for confirmation is specifically these scenarios because I don't like being taken advantage of. Okay, and how do most traders get taken advantage of? Through fake outs. You don't like being faked out. You don't like getting stopped out and then the price reverses. Wait for confirmation. And that's what I've been trying to teach you, is to wait for the fucking confirmation. Again, somebody doesn't have the patience. That's your business. I was young, when I was in my 20s, I was not a patient man. I was just like everybody else until the market beat the fuck out of me enough times. So I learn, right? And that's just why I wait for the confirmation. So, and if the confirmation, this basically saved me money because this was a breakout. If I was trading this type of setup for classical technical analysis, right? The confirmation saved me money. So either way, I either don't make money because the price just keeps on doing something else. Okay, fine. Or it saves me money, keeps me out of bad trades. So my selection, your job as a trader, again, is to be very selective where you put your money, when you put your money at work in the market. Because the longer you stay in the market, the more risk the riskier it is that you're going to start losing money, not winning money. So at least the least you could do to benefit yourself is to not enter willy-nilly 17 billion trades a day. Again, you could try and see how it works out for you, but in my experience, it wasn't all that hot. All right, so same thing with pound, inverted head and shoulders. We did a little peekaboo, no follow through. So everybody's waiting for the PCE data on Friday and obviously next week. So this is why you're gonna have a lot of fake outs and breakouts that don't work out and reverse. And I've explained to you on Monday why this is why you watch this thing to understand red folder events, so you don't get caught up and you can make a plan for the whole week. Again, you're thinking in days, in weeks, in months, in quarters. You have to understand where the flow is going long term, short term, medium term, and short term. All right, when you're dicking around on 1 minute chart, whatever. There you gauge a very minuscule nanosecond flows, okay, and I don't see a dude trading from his home taking advantage of high frequency algorithms who will beat him to death every single fucking time. So not really into 1 minute chart trading for that reason. But some people do. Some people like trading futures on 1 minute. That's works out, makes them money. But you have to be hyper focused. Better take some Adderall or something. Don't advise. That's metaphorically speaking. You need to be on point. Basically, you cannot. You have to be. And how long are you gonna sustain that focus? If you're a 1 minute chart, this, that, watching multiple instruments. Staying focused for 8 hours like that, you won't be able to. Maybe as a novice you'll have 10 minutes and 5 minutes in your max. That's why I suggest you, at least if you like to day trade, 5 minute chart is for day trade, for those who seek the action. I don't even fuck around with 5 minute chart. I could give a fuck about 5 minute chart. I don't even usually drop below 1 hour. 1 hour is plenty of signals. It gives me entry points for the day, or once every 2 days. So I take 3, 4, maybe 5 trades a week max, and that's it. I'm done for the week. 3, 4 solid trades a week, and I'm good. That's what I like. But if for those who like action and they want to feel like they're in a casino, it's your prerogative. And if you can make money that way, make money that way, So, again, also, not a good sign for British pound in 1 hour. You had a sell-off, a little bit of a pullback. This was the floor. Another breakdown, another retest of the floor, okay? So, honestly, with gold, everything, it looks like shit. So, I'm going to take half off and just kill it and leave it at break-even 1 sec. There's no point in and I give these signals to a few selected friends and family, so to speak, here. So this was posted 26 yesterday, buy limit, blah, blah, blah. And there were some other trades from last week. 30 points on NASDAQ was closed nicely as well for 353 points. While you fucking around for 1 or 2 points, 1 hour charts give me 30, and shit like that. Anyway, All timestamp. Okay, so yeah, so this trade, see, I'm watching that silver is okay. Silver is posting a reversal. We're about to open though. The pound is showing the same signs that it's not really bullish momentum. So I don't want to be long gold at this point, because I want to be because most likely than not, if everything else is going down, gold will be dragged down. So it's very very important to watch correlated markets and how they're responding. If you have congruency with them, or they're disconnected. If one is going up, another going down, another going sideways, it's to stay the fuck away. So for example, gold is down 0.4%, but silver is already pushing it for minus 1.1% for the day. That's a lot, right? And it looks like it's accelerating. So if this is accelerating, all the dollar pairs are going down as well, right? That means that gold had a little bump up, but yeah, I can probably get a better entry a little lower today. So where can I get that entry, for example? All right, let's see. Well, honestly, the best entry would be retest of these highs here. Well, we had the retest. Fuck. Yeah. About to stop me out. So yeah, see, I took a couple of points off. I don't need to trade 1 minute to scalp. I just need to, I watch 1 hour and I know what the fuck is going on by watching other markets. And there we go. Stopped, second half, got stopped at break even, so be it. So I took a few points in a very, very, very small scalp, and it is what it is. So you have to know how to, you need to know how to dance, right? So, all right. By watching other markets, if everything is rolling over, it's just a matter of time for gold to follow suit, okay? And against the dollar, right? So dollar is pumping, and you can see the buyers are stepping in. Again, it might reverse in 2 hours. So what? So I'll find another opportunity. But for now, the way it looks now, I don't want to be exposed to risk. I'm very quick. I try not to be in the market longer than I need to be. You want to be in and out. That's it. Yeah. Let me see some questions. All right, boys and girls. Honestly, right now, I would. All right, this is codes, bullshit. All right. Honestly, not much else to do. I need more. The price action needs to do a little more for me to get interested again. I mean, if we take out these highs and we start running, I can just buy momentum as well. So it doesn't matter. I already made a few points there. Okay, Stan, do you think that the bond market is essential element that moves the market? Bond market is primary market that moves the interest rates. Basically, set everything else, the price of everything else. That's why Fed controls it, right? So by setting interest rates, you can manipulate economy that way, right? You can, if you, let's say the interest rates are nothing. You have abundance of free money floating. You can borrow money because they're cheap, right? If let's say you can, from one bank you can borrow and $100, and at the end of a year you need to pay them nothing. And some other bank you borrow $100 and you need to pay them 50% or 10% or 20%. So let's say 10%. Where would you want to borrow the money? Right, you would want to borrow money from people who don't ask you to pay them anything. So the more so people rush in for their businesses, they borrow money, put it back into the either consumption or production, and the economy expands. So watching bonds is essential. I watch bonds all the time. Not all the time. You look like that's one of the things I watch So you watch the short-term 2-year yields. As you can see, they're dropping, which is a good sign. If the short-term yields are dropping, that the market is basically anticipating Fed to cut, then all these moves are bullshit. These are gonna offer you basically pullbacks. This is how you know that these moves are bullshit moves to wiggle out weekends. So I'm still going to be bullishly biased because the bonds are telling me that you can watch the yields of the bond price. They're inversely correlated. So the short-term yield is dropping, so the dollar should be going down, not up. So when that happens, either this will have to turn around, but since it's pushing lows for the day, okay, I think that more likely than not, then we're just gonna get some nice pullback areas, and people will just be positioned incorrectly, okay, and markets will actually, the dollar will actually go down, right? But given that there is no news today, there's low liquidity, not many participants, there is nothing, again, you do get these opposite moves specifically in these types of environments, but smart money understands the psychology behind these moves and waits and just gets better price to strike and do its thing, okay? Okay, how do you deal with the feeling of extremely slow progress when sticking to good rules and risking 1% per trade 3 times a week, please? You feel so left behind. Okay, again, I was 20, I was not patient, and your job is not to, when you risk to 1% on $1,000 account, it looks like it's nothing. However, what you're doing is you are in the university. For the first year or two of this business, you're not there to make money. You're not gonna. I know everybody wants to make money. Everybody wants to have the Lambo. I get it. But if you want to be smart about it and you want to have a fucking, a jet plane eventually, then this is what you do. You do trade with proper risk management, because if you're trading $1,000 and you risk 1% and you make 1% or 2%, whatever, it's still the same principle as when you trade $1 million, okay? So if you learn how to work with percentage gains instead of just the monetary gains, that's when you're going to develop healthy habits that will enable you to make a lot of money in a year or two down this road, okay? When you can be swinging, P&Ls of tens of thousands of dollars a day, hundreds of thousands, some people trade millions, blah, 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 right? But if you're making 5-10 million a year from trading, 50 to 100K a day, plus minus plus, it's pretty decent living, You can buy a mansion, you can buy a Ferrari, you can buy whatever the fuck you want to buy, so. Patience, and everybody is impatient nowadays because we have TikTok brains, right? The social media developed, made us all ADD, right? And you cannot focus for longer than you want everything now, yesterday, in fact, right? So if you want everything yesterday, I get it, but that's life doesn't work that way. Otherwise, everybody would be flying on jets, getting sucked off, and fucking doing some bullshit, but then be bored of it. So through this struggle is how you feel rewarded afterwards. It's kind of like going to the gym again, right? The stupidest of examples. If the reward comes from pushing weights, and then you get the gains, right? Same thing here. So you start small. You eventually go up, but the technique has to be the same or better, improving over time. And the way you improve it is by not paying attention to that you only made $10 on your $10,000 account. Is what you pay attention to is like, okay, for the next year I am in the university. For the next year I will dedicate my life towards learning, towards improving myself, towards being on point. And you know what being on point is for you, right? No fucking around. No bullshit. You know what the bullshit is for you in your specific cases, right? Especially for guys, or girls, whatever. You know what you should be doing and what you should not be doing. So promise yourself, okay, for the next 365 days, I am in this mode. I am here to make this my career, to learn this properly, and I'll give it my all, right? And you'll be surprised where you're going to be in that 1 year. So just because you're trading $1,000 account now doesn't mean in a year you could be trading $1 million account easily. Okay, just percentages. Pay attention to the percentages, and because the entry models that you build will be the same. They remain the same. So you're just going to increase the size. But if you're not watching P&L, watching percentages, then you will not have that fear of, oh my God, I'm losing $10,000. Oh my God, because trust me, if you're going to be looking at P&L and you're swinging, a $20 million account and you're down 150K on some trade, your ass puckers up real tight if you're going to be looking at it that way, right? If you're going to be looking at it as percentage way, then you just know, okay, out of 100 trades, I'm going to be positive on 65% of them, and I will make money. So just because I lost 3 in a row doesn't mean shit. I might take a step back, relax a little, or cut the position size, whatever. But the winning streak will come because my system has been showing me over and over and over again that these entry models work. And how do you know that? By keeping the fucking journal, right? So you create selective trading that is not based on your emotional feel and not impulse driven, because the reason why most traders lose money is because they are impulse driven with by market. The market manipulates you. People who know how to trade know how to fuck you out of your money. They cause this price action and that price action specifically to trigger your lizard brain fucking. And I'm talking about you looking like a lizard. I'm talking about literally your ancient brain, right? To be triggered into fight or flight modes. Oh my god, FOMO, I'm missing out. I need to get in now. And then the minute you get in, the price fucking turns around, does the opposite thing. How many times did it happen to you, right? Same thing. Or you went to your stop loss and then reversed. So not to be triggered by your emotions, you need to have a data set of trial and errors, and you need that's why you're in this motherfucking university and you are studying for the next year or two. But again, if you want to be a surgeon, would you be performing open heart surgery after month 2 on a person and him living? No, the motherfucker will die, as I always say, right? So why do you expect on month 2 of this business you're gonna be next George Soros? Well, that's probably a shitty example given what he does now to the world, but that's another story, right? All right, you know what I mean? But yeah. Alrighty. I think this is it for today. I really appreciate everybody coming. There's not much to do. As you can see, the markets are fucking slow. There's no news. Everybody's fucking off on vacations, like I've explained. So yeah, Nasdaq is accelerating lower a little bit. So I'll be looking to pick it up maybe if I see something around this area today, or maybe even lower. Here would be ideally if we collapse and then we put up a reversal candles, reversal signs. I would be interested in going long, because like I've explained, if this dollar has no business being bought when the yields are dropping, okay? So something is off. When something is off, one of them is going to give, and I think the bond market will be prevailing as more so than the dollar. So this is how you spot a fake out, essentially. All right. Alrighty. All right. I'll see you all tomorrow, same time, 9 a.m. And I wish you all the best. Be careful, stay safe, trade nimble, and be smart about it. All right?